So price doesn't matter. What matters to me is owning a piece of the most valuable computing network in the history of mankind. That just seems like a good thing to own. Since 1913, the United States of America has decided that they're going to steal 2% of my wealth every year. Sometimes more, sometimes less, but on average, 2% every year through inflation. When the gold ETF, it was delayed and delayed and delayed, almost 3 years. Well, why? Well, JP Morgan and others like to short gold, and they kept the price down because if the price of gold runs away, it's an indicator of the devaluation of your currency.
Yusko's discussion is the distinction between price and value. He argues that price is often misleading and doesn't necessarily reflect the true value of an asset. Price is simply what two people agree to exchange for a small amount of a good or service. The true value of Bitcoin, according to Yusko, lies in owning a piece of the most valuable computing network in history. He believes that every investor should hold some Bitcoin, regardless of its price fluctuations. Yusko advises a methodical approach to investing in Bitcoin. He suggests that investors should not attempt to buy all at once, but instead accumulate gradually over time. This strategy helps mitigate the risk associated with market volatility. He likens this approach to how people contribute to their retirement accounts, buying stocks regularly without much thought. By consistently accumulating Bitcoin, investors can build a substantial position in this valuable asset over time. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I believe Bitcoin, little b Bitcoin, not big B Bitcoin, the token, but little b Bitcoin, the network, is the most powerful computing network the world has ever known, right? It's 1,400 times more powerful than the CERN supercomputer. Unbelievable. Which, by the way, someone showed me the logo for CERN, and it's a 666, blew me away. If you actually look at the CERN logo, it's got 666. Same with the Google thing. I mean, it blew me away. But just a fun fact. But the Bitcoin network is 1,400 times more powerful than the CERN supercomputer. It's also the most important computing network in the history of the world because it's setting the new base layer for money. Gold has been the base layer of money for 5,000 years. Bitcoin will be the base layer of money for the next 5,000 or 10,000 or whatever. So my view is the price is irrelevant. Price is a liar. Like literally, price is a liar. Price has nothing to do with value. Price is what two people will exchange a small amount of any good or service. That's the price. Like the price of Microsoft stock. It is what it is if you have 100 shares. If you have 1 million shares, that is not the price. If you have 10 million shares, that is not the price. You got to go negotiate with somebody to buy your block. So price doesn't matter. What matters to me is owning a piece of the most valuable computing network in the history of mankind. That just seems like a good thing to own. Now, you don't have to own with all of your net worth, but everyone should own some. So my whole thing is #GetOffZero. Zero ownership of the most valuable computing network in the history of mankind seems like a bad trade. So own some. And so I was on CNBC, I don't know, 2017, 18, it doesn't really matter when it was. And the price literally, while I was only on for 6 minutes, but like while I was on the show, the price went from like 10 grand to 8 grand. And at the end of the segment, Melissa Lee says, so, price just collapsed. What should we do? All right, buy it. Just, what? Oh, you'd always say that. You'd always say buy it. I'm like, yeah, I would. Buy it today. Buy it tomorrow. Buy it next week. Buy it next month. Don't buy it all at once. Buy some today. I mean, let's say you want 1% or 2% or 5% or 10%. It doesn't matter. Pick a number. Buy 1/10 of it today, 1/10 of it next month, 1/10 of it. Just keep accumulating. That ownership is really important. Now, if you also want to have a piece of trading capital, right? I'm not a trader. I don't really do this because I stink at it. I'm an investment guy. Fine. You want to buy the parabolas and sell at the top? Go for it. Just make sure you buy more at the bottom if you want to trade. But as far as the ownership piece, right? The piece that should be in everyone's portfolio at 1, 2, 3, 5, I don't care, whatever percentage, just keep buying that and accumulating that no matter what the price, and just forget about it. It's just every 2 weeks, most people who have a retirement account, a 401k, are buying stock every 2 weeks. They don't even know it. They don't even think about it. It's just happening. So do the same thing with this. And I don't understand the difference, right? It's a better long-term asset because what it does is not only provide you with a means of growing your wealth, but it's also a hedge against the destruction of the currency we all live and work with, right? I mean, whether we like it or not, and I don't like it at all, and I talk about it all the time, since 1913, the United States of America has decided that they're going to steal 2% of my wealth every year. Sometimes more, sometimes less, but on average, 2% every year through inflation. No, inflation is good for me. No, it's not. On what planet is over 30 years taking half your purchasing power good for you? There's no planet on which that is a good thing. And if you think about any country with higher than 2% inflation, tell the people of Argentina at 118% last month that somehow that's good for them. Or tell the people in Turkey who just lost 99% of their purchasing power that somehow the lira depreciating is good for them. Or tell the people in Venezuela that the bolivar is being worthless. I mean, I have a picture out in the hall that's made of bolivars. Like literally, they used it as the background of the painting. And I had this cool app that you put it up and it flames and you got a Bitcoin behind it. So it's pretty cool. But anyway, that's the answer, which is as one of your core holdings, doesn't have to be your only one, but as one of your core holdings, you should accumulate over time. Yep, you should. And especially for young people, what people forget is for whatever reason, they're like, no, I should have a diversified portfolio when I'm young. No, you shouldn't. You should have a super concentrated portfolio when you're young because you already have this big piece of fixed income, which is your future earnings that's going to come in the future. And so what you should have in the short run is private equity, venture capital, real estate, stocks, all the high volatility assets that you can own when you're young. And Bitcoin is certainly one of those. And in fact, Bitcoin as a part of a diversified equity portfolio, it's the greatest addition because it's uncorrelated with your other equities. Because all your other equities are driven by economic growth, interest rates, and inflation. Bitcoin's not driven by any of that. It's driven by money supply technology and adoption. And the last thing I'll leave you with on that is
Yusko advocates for a concentrated portfolio comprising high volatility assets such as private equity, venture capital, real estate, and Bitcoin. He argues that young people have a substantial fixed income in their future earnings, allowing them to take on more risk in the short term. Bitcoin, with its unique characteristics, fits perfectly into this strategy. It is uncorrelated with traditional equities, driven by different factors such as money supply, technology, and adoption rather than economic growth or interest rates. Yusko discusses Bitcoin's dual nature as both a commodity and a potential future currency. He draws a comparison with gold, which has served as both a commodity and a currency for centuries. The introduction of the gold ETF faced delays due to manipulation by financial institutions, but once established, it provided a way for investors to gain exposure to gold without physically owning it. Similarly, Bitcoin, though currently viewed primarily as a commodity, has the potential to evolve into a currency and a comprehensive monetary system.
if you go back to the GLD ETF, the gold ETF, because at the end of the day, Bitcoin is a commodity today. Now, we can all think someday it'll be a currency or a unit of account or a monetary system. Probably will be all those things. But today, it's a commodity. Gold is interesting. Gold is the only asset up to this point that is both a commodity and a currency. Right? I mean, silver kind of, but gold really is the monetary base. And when the gold ETF, it was delayed and delayed and delayed, almost 3 years. Well, why? Well, JP Morgan and others like to short gold, and they kept the price down because if the price of gold runs away, it's an indicator of the devaluation of your currency, right? Because if you think about it, gold for 5,000 years, a single ounce has bought a fine person's suit. From Cleopatra's time to a suit of armor to a suit on Savile Row today, a single ounce will get you a fine person's suit. Yet currencies have come and gone, right? The denarius in Rome, gone. The drachma, gone. And, we still got the pound and the yen and the dollar, but from 1776 to 1913, a dollar was worth $1. Today, a dollar's worth 3 cents. And so gold in 1913 was $33. Today, it's $2,000. Well, wait a minute. A single ounce still buys a fine person's suit. So what happened? Well, the money got worse. And Bitcoin's the same way, right? We don't price gold in gold. We price gold in dollars or yen or euros. We don't price Bitcoin in Bitcoin. One Bitcoin's one Bitcoin. That doesn't change. What changes is the amount of a currency you need to get it. So if you look in Venezuela, there's never been a bear market in Bitcoin, because the Bolivar has gone straight down, or in Turkey, or in Argentina. And so if gold was allowed to fluctuate relative to the dollar freely, it'd probably be $4,000 or $5,000. My generation, us boomers, we're going to leave $37 trillion to y'all's generation, the echo boomers or the millennials. That 37 trillion is not going to stay at UBS and Merrill Lynch and Vanguard. It's just not. I mean, I say this all the time. I had 3 grandkids, and my 1-year-old granddaughter, she will never have one of these. She will never have a leather wallet. She will never know what paper money is. She will only use digital assets in her lifetime.
Yusko remains optimistic about Bitcoin's role in the financial system. He predicts that as digital assets become more integrated into our daily lives, Bitcoin will play a crucial role in the global economy. He notes the generational shift in wealth, with trillions of dollars set to be passed down to younger generations who are more likely to embrace digital assets. This shift will further solidify Bitcoin's position as a cornerstone of the financial landscape. Please like and subscribe my channel.